Welcome everyone. How we doing? Lambos first in. Wonder if they pop this Amazon into the open tomorrow, probably. They're acting like they want it. Nothing to be sad about on that report. Peyton, how we doing? Gotta love to see it, huh? Poor chart got ruined by the split, unfortunately. A 570C on SPY for tomorrow. Yeah, I approve. I was talking with some couple people, Lambos included, asking today, anybody swing a call? I didn't. The jobs data the jobs data was the real wild card to me. But yeah, I mean, yeah, what kind of, I mean, we'll get into it here in a second. I got a feeling there's going to be like 8 of us tonight. So this might either be a short class or, I mean, it can be as long as people want, but there's probably not going to be too many people tonight. It's actually my bad this time. I kind of spaced out. It was Halloween. I should have gone on Tuesday, not today. But just to let's see, I wonder if I got a blank one anymore. So if you're taking a stab long of really anywhere on this chart on a decent pullback, you want to be, looking somewhere around here. This to me is max pain of where, I don't think we break below there personally, and then and I gotta believe this probably lines up with an SMA now that I think about it. So, oh, look, we're right on the SMA. Yeah. So I love that. I mean, is it a bit of a lotto and are you playing some like news or whatever? Sure. But over here is about where you want to start thinking about being long from over there. And then as you look back left, even more tops. We know that this 565 zone all the way up to 570 should likely be strong. We'll see. We got the mega ERs out of the way, at least as far as I'm concerned. We got the mega ERs out of the way. So now it kind of comes down to an election. And, if there's anywhere to take a stab, it's right around here. I mean, sure, you might get blown out and we might take a little bit of a push down tomorrow on that data. But still, as long as we are above 565, well, I can't, I'm not going to be chasing it or nothing, but as long as we're holding above that 565, I'm a dip buyer down in this whole zone right here. So I don't hate it. I mean, of any lotto to take, it was a good one. And, it's crazy because like the sells that we've seen, like you got You got Meta saying that they're going to grow their revenue like 30% by next year. It's one of the biggest companies on the planet growing their revenue by 30% in a year, and it sells 5%. I'm a believer that the tech dip buyers are going to show up. Most of these reports were good. Um, some were really good. Obviously, like Google, a nice standout. Amazon was really good too. Some of those reports are really good. So I personally do think that the dip buyers will be showing up sooner than later. It's hard. Who knows when? Is it pre-election or who knows? And I'm just thinking of a lot of these reports were good. They weren't piling long good, but you know, maybe Meta on that report wasn't piling long good up here at 600. Maybe Meta starts to look a whole lot more appealing to pile in long down here, 560. I mean, I didn't, but Meta was one that I look at this chart and, without the crazy data and everything, I'm very, very likely, a dip buyer down here in this range, somewhere around here, 560 all the way to 563. If you're going to take a stab, that's where you take a stab. So I can't hate on you for swinging a call. I mean, I would have swung a call before I swung a put. I can guarantee you that. That is for sure. Okay, sorry, we're gonna give this just another second. I gotta do something. I gotta make another post. Welcome everybody. How we doing? Might just give it one more second and then we're gonna get to rolling. Okay, welcome everybody. How we doing? Hope everybody had a great day. Happy to have you here, Dirty River. Tonight we're gonna be talking price action. Um, a lot of people talk about price action. Not a lot of people understand exactly what price action is or even what we mean when we're discussing it. Why do I talk about it all the time? And, what are some things? And we're just going to talk about some common things that I look for. And so a few days ago, I said it actually in both the premium voice chat and the pro voice chat because I wanted people's input, I I do a ton of lectures, as you all know, and I try to do new stuff. I'll have my classes. I, of course, have to do those basics. People love the basic stuff, and we have enough people coming in and out of OT all the time that, I love to do the basic stuff or, even not necessarily basics, but just, kind of trading essential stuff, your supports, resistance, trends, things like that. But I ask people, and so I'm again asking all of you if any of you think up an idea. I'm always looking for new things to do classes on. And so if you ever have an idea, something you want me to do it on, then let me know. And so I had said that in both of the voice chats, and somebody reminded me that they love the price action lectures. And how I do these price action lectures is I try to demonstrate, and I'll say this again in a few minutes, I'm sure, but it's hindsight trading. But how I like to demonstrate reading price action and actually trading throughout the day and how I view the market throughout the day, not saying it's the right or the wrong way, it's just what works for me, is I like to uh go to the daily chart, do all the charting. Of course, it's like you would do for morning prep, if you are trying to trade. It's like you would do for morning prep. But I like to just get on there, show you market support and resistance. Obviously, I don't really have to do that because I already have all my levels. I'm not going to add or change any very often. But so what I like to do is chart some levels, chart on the daily how I would, and then we just kind of basically candle by candle go through a few days, things that I like to look for, throughout the day. And so unfortunately, it's kind of a pain, I'm sure there's a better way to do it. But so basically what we do is, we have our levels charted and then we start on the day. And then we basically just start going through these candles and discussing, what could we do? How could we place trades? What's some price action stuff we see? And, on on I've thought about doing these lectures on demand. If anybody doesn't know what that is, it's just kind of the replay feature on Thinkorswim. Well, it's such a shitty feature, and oh, pardon my language, that it just doesn't work very good. And then it's too slow. So this is the best I can do to come up with it. Obviously, I traded these days. You guys likely traded these days. So we have a little bit of an idea what's going on, but I try to do my best to just mark the levels, and trade it and describe to you what I'm doing throughout the day. And so I like to do it through maybe, 2 or 3 days, 4 days if I can. But uh I always want to do what you guys want to see. So, we can do a couple of days of spy, and then maybe somebody was in another, maybe somebody was in another trade. And so we can discuss how you could have managed something else. And if a different trade that you were in, and how could you have held longer. This is the number one questions that I get all the time are how do I hold longer, how do I make my entries better, things of that nature. And the only answer for that is price action. The reasons we study price action are to be in the market with ideally a proper bias for the day. We can identify some repeating patterns in the market. And when I say that, I'm not talking about, your bull flags and bear flags. I don't do that kind of thing. But, 3 legs on trades. A lot of people have heard me talk about it and see me, I post them in my tab all the time. And we're actually going to be able to give an example of one not really working today. But a 3 push wedge is, frequently, statistically speaking, the market will, just as an example, sell, take a little bounce, sell, take a little bounce, and then sell one more time. So that's the third leg of the trade. And that's just a very common thing to look for. And then it works on the upside as well. Maybe you get a push up with a pullback, one more push up with a pullback. And then on that third push up with the pull, you start to pull back. A lot of the time, that's going to be when you either start to consolidate or maybe reverse. You aren't ever looking for the full, reversal V-shaped recovery or whatever it is. But so just a couple of repeating things like that. It also makes us analyze the candles. And again, we aren't analyzing the candles. I'm not talking named candles. I'm not talking, gravestone dojis. I'm not talking about anything like that. I'm talking about what does the candle actually tell us? And what I mean is, who's winning? Is it, are bears winning? Are bulls winning? Is there reasons to stay in the trade? And so that's what we use price action for. Should we stay in the trade? That was kind of what I mentioned in my, when I was doing the little write-up for the class earlier. Just it tells us, should I be in this trade? Should I stop out? Am I wrong? Should I stay in this trade? Am I on the right side of the market? Are the candles telling me to stay in it? Are trend lines telling me to stay in it? All of that comes back to, what price action tells us. And so what price action is, in simplest terms is what's going on the chart. How is the price moving around? What is the action of the price? And so it helps us figure things out. We always want to take in the big picture. You guys hear me talk about trading in ranges or trends all the time. The market only does 2 things. It ranges and it trends. So we want to be aware of that. We want to know, where are we in relation to the major support and resistances? Obviously, that's where our daily levels come into play. Are there any trend lines? Is there any SMAs around us? We want to use the charts to tell us what to do. You never want to be the person on trade floor that's, oh, can Meta bounce to 600 today? I mean, I don't know. Why are can Meta bounce to 600? Well, we're trading at 566. What about all the stuff between 566? And so, what a person who watches price action might do, they might say, we're just going to use Meta because it's up here. We'll get more detailed here in a second. Meta's up here. If a person who studies price action, they might see us selling down to, where I discuss this big zone on Meta. I want to play a Meta bounce. My stop's below 561.45, and I'm targeting these previous highs. That's what price action tells you. So you can say, yeah, I'm looking for the bounce here. I'm looking for, $6-7 bounce up to these highs, and I have a $2 or $3 stop below me. So you get a really nice risk reward trade on it. And price action is what tells you where you want to go. It tells you where you want to enter, and it tells you where you want to sell. And so hopefully that's what we can start to identify. What are the candles telling us? Are they trend candles? Are they strong selling, closing near their lows? Are we seeing more bearish candles than bullish candles? Are we breaking any highs? Any of that? And we can trade around it so much better. And so again, like I said, well, we got a few messages in here. Let me make sure I'm not missing anything. Um, oh, we got call in the house. That's a wild one. Yeah, I see what you're yeah, and so that's what I recommend. I recommend that people find themselves, find some stocks that you like to trade and trade them and learn how they move, learn, do they react at levels? Do they take big bounces? Do they take small bounces? And really learn a stock and hammer it and watch it every single day. Most of these big names on the market, the most of the people trade, and of course SPY and QQQ, they all will provide you at least one decent trade a day that if you learn how the price moves and how price reacts, you will be miles ahead of the people who are trying to watch, 20 different things. And it will really, really help you, it will really help you start to find more success in the market just because the consistency is what really like knowing what that stock does builds confidence. And so that's what I always try to tell people with trading. When you begin trading, you need to build confidence, but you need to not build it too fast. And learning a stock and watching a stock over days, weeks, months, you will build confidence at the proper speed to be able to execute the trades. We get asked it a lot, both me and Flips and whoever, anybody that's hosting VCs, we get asked it a lot about, do the VCs stress you out? And because most of us who are running those are watching charts all day, every single day, then we can do very well at saying, I've taken a trade that looks similar to this a million times on this stock. So I feel comfortable doing it. Somebody who's just starting to learn price action and, learning stocks and learning charts and things like that, they might lack a little bit of confidence. And so tonight, tonight we're gonna do SPY. As I described, we're gonna start from that daily time frame. You always have to take the big picture into account, take notice of any ranges, take notice of any trends, and take notice of any major levels. And then as I kind of demonstrated, I'm not sure, maybe you missed it in the beginning. And I know it's hard to follow, and especially I apologize if you're watching on phones. I basically click through and we watch the day like this, one level at a time, or one candle at a time. And so that's the best that I can do beyond when we're in voice chat and we're actually able to watch the candles form and discuss what's going on. But so that's what we're going to do today. And so with that, as long as there isn't any more questions, we will get to it. And obviously we're going to start with SPY because, it's my favorite. So no more questions. So always with SPY, anytime you're trading SPY, you'll always want to start on the daily time frame. Like I said, I have all of my levels saved, so it's not, I'm not necessarily adding new levels every day or anything like that. I'm just adding, yeah, Gail, that's the beauty of trading one stock. And don't get me wrong, I think that people should have a small basket of stocks like they like to watch. Maybe it's 3 or 4 stocks, because if you only watch one stock all the time, there will be days that maybe you don't get a trade because it doesn't, all of your parameters don't line up. And so you do need, if you want to be taking trades every day, I should say, you need more than one, very likely. But again, if your one stock is SPY or QQQ, you kind of need to watch some other things with it to know what they're going to do, at least in my opinion. But pick 2 or 3 stocks, learn them, watch them every single day, and you'll start to, I don't want to say like, you will just know when the trade is worth it. You will know when a level is going to hold because you know how things react there. And so learning that, 2, 3, 4 stocks, watch them every single day is really one of the best things that you can do as a trader. And so, okay. Oh, Carl says he has a question. Oh, yeah, he did. It was a private one. We'll get to that one later. So here we go. So when I'm trading SPY, obviously I start on the daily time frame every single day. And so for now, we're obviously, we're basically going to pretend that this candle hasn't formed. We're basically going to pretend that these candles haven't formed because we're going to be going through those 3 days to try to see, what the price action told us, how could we make trades, that kind of thing. So the very first thing that I do anytime I'm charting anything on a daily time frame, I look for what I describe as major highs and lows. Obviously, we aren't going to be marking these ones down here. We don't care about 520 on SPY right now. We want to focus in the zones where we're trading. So obviously, we had nice top here, big sell after it. Some nice tops here resulted in a sell. Obviously, when we broke above them, another nice sell. Anytime I see something like this, there's some, and I should say, when I chart support and resistance, I'm always on the wicks. I will always chart my levels on the wicks. Not to say charting them on the body is bad, but I will always chart mine on the wicks. I also always take note of a unique candle like this, with this, I don't remember what happened this day or anything, but the market closed at 561 and the next day it opened at 570. And so it was up $9 from the close to the open. And then throughout that day, it also had basically a $5 range to end up basically flat. That's a weird candle. So I take note of it and I want to mark that top. Do I think it's going to be some super gigantic, crucial level? Not necessarily, but I want to be aware of it because, not only did we gapped up $9, then we ended the day flat, and then the very next day we gapped down $3, just over $3. So some weirdness was going on there. So I want to be aware of it. And then again, these are our highs up here. So I kind of want to think of this as basically a zone, a range, whatever you want to call it, that we will think of as, strong support, or if below it, strong resistance. We don't want to be the ones getting long up into here. And then again, we just keep going forward. Anywhere that we take kind of these dramatic pushes up and then break out, I become interested in it. Right here, I want to mark these major highs. Want to mark again, all-time highs, obviously. And then all I start to look for here as far as, additional levels that I need or anything like that, I want to look for areas of consolidation. And so when that's the only other thing that I am going to mark besides major highs and lows. And so when I see a big area of consolidation like this, obviously we were kind of between these two zones, then I want to be aware of basically the middle of it. We had a lot of bounces off here, a lot of wicks off here. It was the bottom sometimes we'd wick below it and buy above it. Sometimes we wick down and close really close to it. I want to be aware of those types of areas. So I will always put that on the chart. Again, any consolidation zone that does that. This one up here, this is a nice little range, obviously, that we were in for, basically a month. And so I want to be aware of those. And then again, right around here, you can see we don't have a lot of information. Of course, we can put this one on here. This is kind of where the big bounce was. We can put that one on there. But we don't have a ton of information. And as you can see, we ultimately ended up gapping through it, And then again, I just look at this consolidation. I kind of figure out where we are, where have we taken any sort of bounces? Is there any other major lows or highs in here? And really for me, it's this. This was a little range we traded in. So those are basically the only levels that I have a ton of concern with. We caught this wick with these previous highs. Obviously, it's not dead on, but it's close enough. So these are really the only levels on the daily time frame that I am overly concerned with. Obviously, maybe you ran your fibs from your lows to highs. There's some other things that you could have your eyes on. But as far as support and resistance, these are the daily levels that I care about. We got what, I don't know, 10 levels in a $20 range on SPY. Those are the types of targets we want to have. Then we use price action intraday to figure it out. So after this, we obviously are going to go to the 5-minute chart. We're going to come back to here this day right here. And then we're going to turn on the indicators that I personally like to use. maybe, oh, I'm gonna turn off the opening range ones. Those are ugly. So these are the indicators I like to use. We got our 9 EMA, our 20 EMA, our VWAP, and our 50 EMA. And then this stair-steppy one, for anybody who doesn't know, if when you hear me or Sushi or all those kinds of people talking about the hourly 20, that's what this yellow stair-steppy one is. This is the hourly 20 EMA. And then so just to show everybody again, all of these levels on this chart are from the left. So we pretended these days hadn't happened, and now we're gonna go back and we're gonna see what kind of trades could we have found on those days. Obviously, I'm not gonna start here, and so this is going back to, I guess Monday, Tuesday, something like that, where we have our levels, we've had some consolidation, so now we're kind of coming into the day, and we haven't started trading yet. We see that we kind of have, some nice ranges here, a nice little $4 range that we can trade within. We can kind of start to have our bias, this 580 should, we should stay bouncing above it. We should stay rejecting down below it. And this is kind of the trade that we want to have our eyes on. So we start watching the market. And then for me, as we're coming into the open, something that I am personally always going to do is take note of any sort of pre-market trend that we have. So obviously we have our high here, we have our most major lower high here, and I start looking at that. And I'm looking at all of my indicators, I'm looking at everything heading into the market. And so right off the open, I can say, okay, we're below all EMAs. I know we can see there's a couple candles above it, but we're below all EMAs, we're below VWAP, we're below hourly 20. So I probably want to be short off the open. And as most of you know, I'm not one to dive in the first 5 seconds of the candle, but maybe you take this trend test up to there. However, I am only short down to this 578.39. If we break below it, I can continue to maybe be short if that's what I want to do. But I'm personally, and I know some of you would dive in if you saw this, but for me personally, I'm missing this trade, no questions asked. So now I have to let the market work. Well, this level is where we expect to bounce because it is support and resistance. So if we are going down to here, then I want to, I want to be considering a bounce, but I want to see some sort of what I describe as a reversal candle. And this isn't one to me. When we see, we'll find some reversal candles, some ones that I would like to take a trade on. This isn't one for me. So I probably am not buying the calls here, even though I expect the bounce. And ultimately, we do get the nice bounce. And all I can do, I missed this trade because I didn't like the reversal candle. Maybe potentially I can, buy the retest down here. I'm sure some people would. Again, we know looking left, this is a nice strong support. So maybe you catch that, maybe you don't. Well, the next one that I would have my eyes on is we have our pre-market trend. We have now broken above it. I buy this retest right here. And when I buy this retest on the trend, I'm buying it because obviously we've had a strong push up. We've had a strong breakout. We've reclaimed all EMAs and VWAP. The last one we got above us is the hourly 20. So I'm buying the retest right here for a scalp. First target, 580.39. Second target, hourly 20. And we are basing all of this just on what we see to the left. It happens to line up with some of these highs from the pre-market. It happens to line up with some of these lows from the day before. We know that's where we're targeting because that's what the price action tells us to do. We do have a level here, but if we look left, we know that this is also going to be tricky over here. So we catch our scalp to here, stops above break even, and we continue to watch the market. We have our foot in the door, so we stay in it. My stops are probably right around 580, and we let the market work. Oh, wow. Well, so it's normally not always going to work like that. You get this big old breakout, obviously you should very likely be out of this trade. I'm going to guess that this was some sort of data release, who knows? But you get this breakout, you should very obviously be out of the trade. However, now that we have reclaimed all these EMAs, we have reclaimed VWAP, we've reclaimed the hourly 20, we're above what was to us kind of our midpoint of the day. We want to be slightly bullish above here if we can. Well, I'm going to be out of this trade, as I said, but we have reason to be bullish. So I am looking for a pullback and for a pullback to buy. I'm probably not going to buy this pullback, even though it bounces our level beautifully, but I'm likely a buyer of this pullback right here. Without a doubt, we've broken above the 9 EMA. This is kind of, we break it. Here's really our first test. Here's our second test. A lot of you, what I was discussing earlier, the market likes to do things in threes. It's a real statistic. It's not nothing weird. So I start to feel less and less confident the more tests it has. Well, our entry is right here. We buy this pullback to here. We know the trend is still up. We know all EMAs are pointed up. We buy this pullback right here. First target going to be the 581.50. Second target going to be this 581.80-ish area. So we kind of luck out. I mean, we basically get the bounce to the very first target right away. I mean, you're within what, 3 or 4 cents. So you take your trim instantly. And then now you just let the trade work. And as long as we stay above this 9 EMA, you stay in the trade. When we close below this 9 EMA, you stop out. So here's your stop out. At least for me, my stop has already been ratcheted up, but you take your stop out right here, and now we watch the market and let it work. We had 2 nice trades based on pullbacks to support or, EMAs or whatever it may be. And now we let the market work. We're starting to see some volatility that though we're above EMAs, we are starting to form a range. And so that is where, and this is always, hard in my lectures, that is where I start to draw the opening range, because it is now at this point been set. So we have it here. It's obviously, I guess I could probably, I wonder if you can do, nope. So we have it here, and this is our opening range. As long as we're within it, we aren't looking for breakouts. We're actually looking to short the highs and long the lows. So we just continue to watch it. And we don't have, is there opportunity right here to scalp? Absolutely. However, most people will not want to take these trades. I mean, you're touching here and you get this bounce. All of these bounces are going to pay you a nice, 20, 30%. So we have no interest in trading through here, through here, through here. But as we start to look at the chart and we're watching these candles form and we're seeing every dip getting bought off of this hourly 20, this is where, once we've watched this for an hour, remain as support, we can start to say, okay, I kind of think we might get a bounce. So maybe you buy this pullback, maybe you buy this pullback, and I hope this one doesn't get blown out. Maybe you buy this pullback, but your stop is very tight. Your entry is crucial. You enter as close as you can to the hourly 20. Your stop is very tight for if you're wrong. So you take this entry right here, and obviously you get the nice push up to the previous highs where price action tells us we want to trim. And maybe you took this one and you wrote it back down and then you get the bounce, whatever it is. These are fine entries here. Good enough candles to buy, strong enough support to buy. You take your trim. And for me, because this is a double top, I'm taking basically everything off but a runner on that bounce. And then we continue to just watch the market. And you can obviously be attempting to short these highs, but if you're in there long off of here, you're likely kind of riding this. At least, I probably would be. And then you get stopped out right here. It's of course your support, so you can continue to hold, but if you're on a same day, you aren't going to make it. And now again, we just have to sit and watch price action and ask ourselves, do I want to get involved in this market? And it's hard. We know we have strong support here. We know we have strong resistance here. We've had a lot of tests of the lows. We've had a few tests of the highs, but we know we're range trading. So maybe we just keep watching, and hopefully we get another dip down here to this 581 area to buy the dip. Oh, looks like we aren't going to. That would have been our dip to buy. Where we stopped out was apparently the dip to buy. However, now we push back up. And we're looking for range trading type of movement up here. And so, even though we've broken out, we're going to assume that our first breakout isn't going to work. That's something that I try to teach all the time. And sometimes they do, sometimes they don't, and we're going to assume the first breakout's not going to work. Maybe you short up here. If you're quick on the draw, it just so happens to hit our level. So it's a reasonable enough short. However, I'm probably not going to catch that short. unless I'm, really on it that day. And now I'm going to see, can we consolidate outside of the opening range for a few candles? And can we maybe get a retest of the highs? Or if we break back in, can we get a retest bounce up to it to short? So we know this has now become our real line in the sand. So we continue to watch the market. This is my entry right here. And maybe we get blown out, maybe we don't get blown out. But this candle right here, we have a sell-off. We have a sell-off on reducing volume. This is a candle I like to look for, because this goes into the reading of candles for price action. This candle right here, at one point, solid. Bear candle, very ugly, was not looking good for us, and then ends up turning green. This is, if anybody ever hears me talk about, a signal candle, this is not a super strong one, but a potential signal candle where one side was rolling or like doing really good, and then they get smoked by the end. So that is a nice signal candle. So I look for an entry on the next candle. So my entry is here. Tight stop is, I'm buying this pullback, it's somewhere around here. Tight stop is the close in the opening range. Any sort of strong selling below this 581.75-ish area, so you got about 40 cents risk, 30 cents risk. Any sort of strong selling below there, I'm taking the hard stop out on the way, just because, we know it's a range day, so it could be pulling back. And so, oh man, and I for sure would have been, well, I'm going to say I for sure would have been stopped out right here, unfortunately. But again, this is what you have to do as a trader. When you're wrong, you're wrong. Maybe you hold a little longer. I personally wouldn't have. But I, again, will do the exact same thing and watch for some form of consolidation on the top of this opening range. I need more than a bunch of inside candles. So I'm just going to continue to watch and watch and watch. And now we suddenly have a candle that has piqued my interest a little bit. I'm not chasing this candle, but all of a sudden we have a candle where one side won. So now I'm starting to say, okay, maybe we're going to get presented another trade. When we start to see this, I start to buy these pullbacks to the 9 EMA. And it's the same trade as this one, other than we're above the 9 EMA. This candle was kind of my signal candle. Was very red and bearish at one point and turned nice and green and bullish. Same as this one, very, very red and bearish at one point, turned nice and green and bullish. I buy the pullback. Same here. I buy the pullback. You don't ever want to buy the top of the green candle. So one of these two pullbacks is my entry. And of course, we're coming into the end of the day. So you can take the scalp here, but ultimate target is these highs again. So, I mean, maybe you aren't up enough to, trim. Maybe you're only up 5 or 10%. So again, you continue to watch the market. And ultimately, here's our target, where for me, I'm fully out of the trade on the fear of the double top working, because we're still, even though we're trending up, we're still a little bit worried about range trading activity. But we watch our next big level right there. We look for any sort of thing to tell us, do we think the market is going to break out, or do we think the market is going to pull back? Obviously, we're happy with our exit because of the double top, but do we buy the pullback right here? And for me, yes. The risk is now we have an hour left in the day, so we're basically into lotto territory at this point. Maybe you buy this pullback, maybe you don't. We're seeing kind of the decreasing volume on the sell-off yet again. So maybe you buy this pullback, maybe you don't. Maybe you wait for a slightly deeper one here. 582.20 stops again back in the opening range. But if you're lottoing, you're probably in on this 9 EMA test. I mean, I am, and then ultimately looks like it works a little bit and then fails. So maybe you make, I mean, when you're this close to close, you're making some bucks on a little move like that. Ultimately fails. And now at this point, I see another thing that I love to look for in price action that we likely could have even identified just by using these tops. We've now had 3 pushes up on this. So if I did buy this dip, I am for sure fully out right here, and likely not really looking for another trade at this point in the day. And so again, that's how I read the candles every single day. We'll keep going through it. Wow, ultimately ended up working real nice. And then nice bounce into the close. So any questions on that? Any questions about why would it take an entry? So you saw, nice entry here, nice entry here, ultimately a stop out over here, even another nice entry somewhere here or here. So couple good trades, one trade that went against you. That's just part of it. You have to stop out when you're wrong. And when I bought this trade, like, and I would buy this trade. When I buy this, I stop out here. I was wrong. That was it. I was early. That was all there was to it. So I take the stop out here. And that's where, that's all we can do as traders is when we're wrong, we have to follow our rules and move on. How can you find a base on the falling knife? Well, Norvin, you should have been here for the whole class and you would have seen how I analyzed the daily time frames. Okay, so again, we just keep on cruising on. We're coming into the next day. Well, ends up being a little bit of cheating. And we notice again, like I said, I tend to always do the same thing. I bet you I can. We're going to yeah, we'll see how far this goes. It's probably horrible. But so coming into the day, trend is down. We had the nice push up after. Trend is down, below all EMAs, below VWAP, below hourly 20. So I'm watching into the day. I want to short a bounce. I'm looking for a bounce up to this trend where I can have the really tight stop, either VWAP, trend, hourly 20. That's what I'm looking for into the open on this day. And I don't get it. You could make the argument that maybe you'd take this. I wouldn't. I would want the full bounce up there to really confirm it. And now I start watching the market and you notice, hey, we are in between the same levels that we were trading the day before. So all from the daily time frame, all from previous. So we can kind of start to think the same thing. If we're going to sell below here, we might be looking for lows down here. If we start to buy up here, maybe we can look for the bounce. However, strong sell down, big buy up in this first 20 minutes. I'm sitting on hands personally. There's nothing, the price action isn't telling me anything here. I would have bought the dip here. You could theoretically buy this close, but after 3 really bearish candles, you do kind of have to ask yourself, is this trade going to, go against me? And so, nice bounce up. Again, I'm still watching this trend for the short. It's not going to be something that I rush into because obviously we've had failed breakdown. Now we're trying to break out upside, but I'm still watching that trend. And we push and we close right above it. So now I have to ask myself, what do I think the market is doing? And I like to do it. We look at these candles. Okay, 3 strong bullish breakout candles. We did fail the breakout down or the breakdown. Now we are trying to break out above trend, above opening candle, above all EMAs and VWAP, but we're still in this range. So for me, I'm sitting on hands. You can risk the buy here, but with the volatility we've seen early, I'm probably want to see some consolidation personally. The market did not. However, now we push up this 582.72 and I start to say, okay, what do I think the market's going to do? Obviously, up here, you can look for the short. We even have some highs, previous highs. You can look for the short, but we're above all EMAs, hourly 20. So again, I'm probably just being mad that I missed this move and I didn't buy this pullback. That's just me. I'm telling you how I would really trade it. And I'm going to look for some consolidation, and I'm probably going to look for some consolidation to maybe get short right here. Not looking for a dump to lows or anything like that. Looking for a scalp back down to the hourly 20, maybe down to some of these EMAs as they start to catch up. But I'm not rushing into a trade. And yeah, see, this is not giving us a lot. Still, when I start to see, this was a buyer 1 candle, this was a buyer 1 candle, buyers 1 here, but not, we aren't closing right up there at the highs. Ultimately lose it, ultimately buy it up over it. I'm still, again, just watching, probably feeling slightly short biased myself. Still nothing in the form of an entry here until this candle has suddenly given me interest. The market fought really, really hard to hold our level. So now I start watching the market and maybe, and so that was the one that gave me interest. Probably wouldn't have entered it. There was the drop we wanted to retest those EMAs. So again, price action didn't give me an entry. You could have made the argument, look at all these wicks on top, but this, you also could have made the argument, look at all these wicks on the bottom. But we just watched the market. Again, we're back to sitting on hands. What I teach to people all the time is 90% of being a good trader is doing nothing. Okay, so now we've sold down. we've bounced up to our level that was previous resistance. I now have interest in this trade. And this would have been an entry for me. As close as I could get to here, I would have been watching this candle form. This would have been my entry. And price action tells us our stop is over these wicks. So we know that we basically got about 30 or 40 cents of risk on this trade. And I'm probably going to go hard stop because if we do break over it, we're probably going to get hurt. We are, again, not looking for a big move. We got our 30-cent upside stop. We're really looking for this hourly 20, which is, I don't know, 50 cents or so below us, 40, 50 cents below us. So little one risk, two reward trade. We get our scalp and then we go right here and we bump our stop into profit and we watch the trade work. And the trade keeps working better and better. This was our entry, nice entry here. And then, bounce up or we get the bounce up that doesn't do anything. So now we want to use price action to tell us, do I stay in this trade? So obviously we should probably be trimmed here. And what I like to tell people to do is when you get, I have two rules of thumb. If you trim, you move your stop. So when I trim here, my stop is now above break even. If I was happy with those profits, then I don't want to let the profits go back. Well, now that we have another breakdown candle, now I move my stop to here. I probably trim too, because obviously we're at VWAP, so very likely point to trim. So we've had, our first trim came here, next trim came here. We now have our stop moved to here. And why do I move it here? Because this was the beginning of the breakdown. So we know if it's going above here, it's likely reversing to the upside. And again, we sit and we watch the market work. And we get stopped out. And obviously, as let's be real. You catch a $2 drop, you should only be in runners by this point. But we go down and bounce VWAP. I don't see personally any sort of entry for me here. My stops have likely been moved down after this breakdown, somewhere around here, maybe here. But no matter what, you're stopped out of your final runner. And again, we keep on watching. We're back to these wicks. I'm not going to short a very strong candle like this. And I just continue to watch the market and let it work. Still not seeing anything that really excites me a ton here. I'm sure the 9 EMA buyers would have bought this pullback, but that wasn't for me with the previous resistance right there. So again, still watching the market. I'm starting to considering a bounce purchase here, but being worried that we're below all these wicks. So sitting on hands because price action tells me to sit on hands. Well, now we've sold down again. Probably a lot of people wanting to buy this dip. Not for me. We got some EMAs below us. We got some EMAs above us. We have that strong resistance above us. I'm sitting on hands right here, basically the middle of this range that we have going on. I didn't even draw my opening range yet. This is what the opening range would be. So, oh yeah, failed breakout of the opening range, right in the middle of this upper range. I'm watching here. Okay, back down to VWAP. Suddenly starting to have a little bit of interest in a trade. I don't care if it's, part of not having the bias, we're looking at sideways trading. So part of not having the bias says, okay, the VWAP bounces work twice, right here and right here. Is this VWAP going to hold? And now if I see consolidation above it, I will look to play long. If I see a breakdown retest of it, I will look to play short. I'm gonna need confirmation from the rest of the market. Obviously, we're trading SPY, so you want to see where Apple, Amazon, Microsoft is. But I know roughly in my head, if we are consolidating above it, I'm gonna look for a bounce. If we break down and retest it, I'm gonna look for a short. So again, sitting watching. We're consolidating above it, and there's the breakdown with unfortunately no retest for us. That's just the way it is, So again, we sit and watch. We're coming back to our pre-market trend. We're coming back to our 580.39, lines up real nice with our trend. And now we start to say, I am watching for a bounce or again, a breakdown retest, ideally targeting these lows or something like that. So there's our bounce at the level. I probably wouldn't have taken that. I would be waiting for, I won't buy 3 bearish candles like that in a row. You could have risked it with a tight stop, not for me personally. So I continue to watch the market and look for maybe another retest or again, breakdown retest. I don't care which it is. As we're getting down to the low of the range, I'm obviously going to be looking more towards catching a bounce. Bunch of chop. Don't get me wrong, probably a reasonable enough entry right there, but I still wouldn't have taken it. Okay, here we go. Now I start to have interest in a trade. Was a big level previously, had one candle below it, bought us back up over it, took the big bounce right here. Real strong sell into it, but I want to see how we react. We are either going to take a nice bounce here finally, or we're going to take a nice breakdown here finally. So I have to let the candles tell me, do I enter? And this candle's getting me pretty interested. That's a pretty bullish candle. I'm going to try to not chase it, hope for a little bit of a pullback to maybe get in. It gave no pullback. I wouldn't be terribly opposed to this, but your stop is about 30 cents wide. So might have been a buyer there, but I would still likely want a little more pullback. That's probably the one I buy. Oh, we got 45 minutes left in the day at this point, it looks like. So that's the one I buy, looking for scalp to EMA. Who knows how this candle played, if it went up and then back down or anything. But I'm in here long, tight stop below it. 9 cents, not really enough to scalp out of the bounce. As we start to push up to this EMA, I'm trimming here. It's only a 30-cent bounce, but I'm trimming at the EMA because technically we're downtrending, so we are trying to catch basically a double bottom for the bounce, but I'm keeping these stops pretty tight because I'm worried of getting blown out. That candle, likely would have stopped anybody that was in there out. And last few candles of the day. Oh, I think we actually did hit this one in voice chat. I kind of remember that because I remember this volume forming, like seeing the blue volume come in. But for me, this would have been the last scalp, stopped out on, this candle or something, made a couple of bucks there. And then obviously there. So not a ton of, a day like this on SPY, not a ton of trades for me. You guys saw right there, they just never presented me an entry. So again, on to our final day. This one we're going to do a little bit faster, just so we can hopefully get into some questions. So, oh yeah, I got to get rid of that one. I forgot I extended that. So obviously market really, market really selling down in those after hours, finally taking us down to some other levels that we were, some of the lower levels that we were watching. Bounce into the open. So watching our same levels here, this was obviously, kind of an ugly little trend. I probably wouldn't have cared a ton about that one just because we had, sold so well below it by the time market opened. So for me, I'm watching this level right here. We know big, strong daily level. This is likely where we want to look for a bounce or we want to look for a breakdown retest. So we keep watching. We keep watching. And looks like we're going to have to adjust the old screen a little bit. So again, we keep watching. We keep watching. We have, so this is actually kind of an interesting one because so we have our pre-market lows, obviously big levels. We have all of our EMAs here. We have our trend down. And so because all of this is happening, as I'm looking at this, and again, this is hindsight trading. So of course we get a lot more time to analyze it. These are reasonable entries. We're below trend. We're well below hourly 20. We're below all EMAs and we're rejecting VWAP. This is a relatively reasonable entry. I would personally be cautious just because of the big sell-off. We sold off $5 or whatever, I'd be careful chasing the short. But I'm sure a lot of people would have taken this entry, and that's actually a reasonable one looking back that I'm obviously probably sad that I didn't take. So nice sell down. Obviously, this is your next target. I'm not chasing shorts here. I'm looking for bounce, or I'm looking, some sort of reversal candle with a pullback to give me an entry or breakdown retest. Always. That's what I watch for all day long. So there's some consolidation. Definitely not a strong bullish candle, but maybe I'm still looking for this bounce. If I didn't take this entry, I'm not taking an entry on this candle. I'm still just watching for some more consolidation. Trend is strong down. They're selling it off. So I'm starting to personally feel less and less confident here. Now I would almost prefer the bounce up higher for the short. That's what, at least when I look at this, that's what makes sense to me. Or our breakdown, we had our breakdown, we had our retest. So price action tells us we are in short here. Unfortunately, wider stop, 80-cent stop, but we know our next major level is going to be this 570.41 down here below us. However, you catch, God, I mean, almost basically a dollar candle down, you trim, something like that. But we're in this trade. So we're making money, we're happy. And then, as I said, our stop is up here. So I'm still in this trade, even with this bounce. We're well below the 9 EMA. Trend is down, below all EMAs, below VWAP. Maybe this one stops you out. It shouldn't stop you out, especially if you got a trim in there. Now we continue to move, or we continue to watch it, and we know where our entry was. And now we also know how to manage our stops. We're trimming this. So now our stop is into break even. And we go forward, stop is still, here at break even. We haven't had a big breakdown candle yet. So, I mean, we're still trimming. Here is now our next breakdown candle. So now we had our stop because we trimmed, and at least me, my rule is if I trim, the stop moves. So the stop was right around here at break even. Well, now we've had another breakdown candle. Stop moves to here. So we continue to stay in this trade. We know this is our big target. So we want to be trimming as we come into this. You want to trim into that. So we keep on watching. We're taking a big trim here. Again, we've had another breakdown candle. So for me, I'm bumping my stop to right here. And I'm stopped out on the next candle. We would have looked for a bounce here, but we don't care because we just got a $2.60 drop on SPY in a half hour. So we're happy. Trend is still down though. So we continue to watch the market. We have a strong downtrend. But the main thing that I'm noticing, we've got ourselves a little bit of a wedge going on here. We push down, here's our first leg down, here's our second leg down, here's our third leg down. I start to have less interest in shorts. I'm not going to say I'm going to be long, but something that I look for when I see something like this form is some sort of kind of breakdown past it. If it, maybe like not huge breakdown past it, but a little breakdown past it. And I will sometimes buy that first breakdown because I assume it's going to be a bit of an exhaustion thing going on. So again, I continue to watch this and I'm honestly kind of in dip buy mode. Down here to 570, whatever it is, I'm in a bit of dip buy mode here. And I want to see a little push, maybe 569.90, 569.80. And we just consolidate. And we just consolidate. So obviously you can be buying these 570 dips for scalps, but there's nothing here to really tell you to be getting involved in the market just yet. Obviously we didn't get our breakdown. Uh, you know, we get a breakdown, but we didn't get that breakdown. We didn't get to try to buy it. Maybe you buy this double bottom. That's really the only thing I see going here. But this candle is a rough one to buy a double bottom on. So again, we sit and watch and we kind of say to ourselves, I probably still am looking to short the bounce to 573, or I'm looking to buy the dip down here to at 570.41. Opening range is formed. I'm willing to bet, yep, this is the opening range. So we're dip buyers down here with tight stops under these lows, and we're short up here, 573, all the way to the trend. So starting to consider a dip buy. Again, we'll really buy the dip all the way down to about 570 with a tight stop. None of these candles are telling me to buy it yet. Obviously, bear's in control, so we're watching. Now we have a nice little bullish candle right here where I'm likely taking an entry on this candle. Yes, we're below EMAs, but we're at the lower range, looking relatively triple bottomy to me. And then I'm going to run the tight stop. Really, I'd want some new lows, really a break with strength under 570, maybe, 10, 15 cents below there. You don't have to give it a ton of room. And I'm watching and I'm getting stopped out. I'm probably stopped out right here more than the breakdown. I'm probably stopped out due to the time. We're getting late in the day. So if I'm on a same day, I don't want to be in there. So that one's likely a stop out trade for me. God, maybe. I mean, maybe. It's hard to say. Hard to say without being in the actual market. That one stops me out, even though it's probably going to be where the bounce comes. Now I continue watching, just chopping. Okay, chop, break above our level. I'm probably looking for some sort of pullback here. This is probably an entry for me. Even though I took my stop out long, this is probably an entry for me. A lot of consolidation, so I don't love it. You know, you don't always have to be in a trade or nothing like that. But this could very well be an entry for me. Again, it's going to be kind of the same stop break below that level, something like that. Gives you a nice bounce. And you're targeting VWAP and this trend. You aren't looking for a breakout. You're looking for a nice little scalp. So you aren't going to trail it like a trending trade. You're just going to kind of, I mean, God, we're getting into 45 minutes into the end of the day. You're just going to kind of trail it as best you can. Then again, we keep going forward. There's our stop out if you weren't, in profit, obviously. Again, I'm kind of looking at this 570, asking myself, God, we got 15 minutes into end of day. I'm probably a buyer here on a high risk one. We get the nice, we get a nice little doji candle. Then as this one's forming, I'm buying the pullback, somewhere down to here. Again, stops below those lows. Oh, and then I'm all out. Wait, is this today? I think we hit this trade in voice chat. Then I'm likely all out at that trend right there. Ooh, and I'm very thankful. This is today. I didn't realize this was today's price action. Because I got long here, Flips got short here, and then we made money, and then he made nice money on this drop. I think those things, like minus 90% to plus 90%. And then there we are, end of day. So that is price action. What did everybody think? You get it? We had over 30 of you in here. I mean, I know it takes all day long to learn these things. You got to sit and you got to watch them, and you got to watch the you got to watch the market. And oh, nice, Kelly. That totally is my trade, huh? It's nice to know that when I went back and looked at it the second time, I still would have taken it. I was happy with that one. That one was good. So this is what I do every day. And obviously when I'm trading SPY, I'm also looking at your Apples, your Amazons, Microsofts, Nvidias to say, are these names that support and could we bounce? But if you're trading individual names, if you're trading Apple, you read the price action the exact same. Are we trending? Then I want to trade with the trend. Are we double bottoming? I want to catch it. Do we have some sort of strong reversal candle showing up? Do we have some sort of strong reversal candle showing up? Then I'm going to take that risk, like, did these buyers show up? I'm buying the dip, that kind of thing. So it all comes down to keeping it simple. And then, some of these were weird. Like we were buying calls below the EMAs, looking for the bounce to the EMAs, So hopefully everybody enjoyed that. Any questions? Let's get to them. How can you find a base on a falling knife? Norvin, we'll go back to that one. So, oh yeah, look at those. Yeah, we got to get rid of those because those are extended. So you look left on the chart. That is what I tell everybody. If you want to know what what is the market going to do to the right, look left. So when you look left and you start to see all of this bouncing right around the area where we are, that's where you want to start looking long. When we're knifing below supports, you don't really want to be looking long, you want to be looking short. Triple top on VIX. You don't do TA on VIX. Funny question though, if that's a joke. Oh, nice. This is, yeah. Just, you don't do TA on VIX. VIX is not calculated. VIX is calculated based on the spread of the front month SPX contracts. About 500 different contracts. It has absolutely nothing to do with technical analysis, just for future reference. Why is QQQ more aggressive on the sell side? It's not. I mean, honestly, interestingly enough, big sell on this QQQ, but these are the big major previous low to me, at least, was kind of this 485 zone. So we're a buck below it. Well, the SPY chart, very similar, it has that same wick that was, right here. This is that similar low that we set in October. Well, SPY is now sitting solidly $6 or $7 below it. So the selling technically more aggressive on SPY right now. How often do I watch for consolidation? Always. Consolidation is key to trading. What I explain to people is without consolidation, you can't see a big move. So you heard it, I said, I think maybe it was over here. I don't remember where it was. I removed my trend. Maybe it was over here. I want to see consolidation at this level because when we don't consolidate and we, bounce and then we sell and then we break down and we do this, this doesn't get, you don't want to be fighting the trend on price action like this. You want to short the bounce, maybe, short the bounce, maybe. When you're looking for a change of direction, you want to see some consolidation. And what that consolidation is showing you is that the level where you think it's going to bounce is going to work. Yeah, Mario. So that's, that's the other thing. If you aren't super comfortable and really know how things work, always trade with the trend. So on something like this, this is the other way to do this is you could have drawn this trend. Here's your start of it. Here's your first lower high. You can short this bounce. You can short this bounce. You can short this bounce. Well, that's the third leg. So now you kind of want to quit shorting it. And once we start going sideways, which, don't get me wrong, I like trading trends and there's plenty of like money to be made. No matter how you look at it, this is chop for the whole day. So, and chop is much, much, much more difficult to trade. Chop is for definitely much more experienced traders are the only ones who should be messing around in chop. Chop blows more ports than, well, less ports than SPX, but more ports than basically anything else. So always trade with the trend if you can, and don't be the person trying to catch the bottom or the top. If you are, everybody's going to make fun of you because you'll buy calls when you should have, it was just an obvious short, or you'll buy puts when it was just an obvious long kind of thing. Never be the person chasing the bottom or the top. We want the meat and the bones. I don't care if you're short here, but if you can get short here, awesome. If you can get short here, awesome. And then you're out of your shorts here. I don't care if you exit here and enter here. We just want the middle. Yeah, Kelly, that was a good one. That one worked real nice. Right on, Gail. Happy you learned it. So yeah, good question. Jorge, do I mark support and resistance on the daily? Yes. Almost exclusively on the daily. And then it's not just the major highs and lows, but the major highs and lows, as we discussed, things like this, I care a lot about. Anywhere where we take a big sell or down here, like this was one that actually some of us caught. I mean, a couple of people caught this one. Market was getting scorched. And then we get this wick down to here. Well, while everybody thought the market was going to continue to die, I'm looking at this saying, like, well, the risk reward is a no-brainer. You get long here. So it works on both ways. Highs, the highs for rejections and the lows for support. That it will work over and over and over again off the daily. And as far as how far left, as far as you need to go. That's something that I talk about. People are like, well, how do you have levels? And what happened, a while ago, 2022. So here's 2022. And we sold down pretty heavy. Well, when we started bouncing, people are like, where, into 2023 and stuff, where do we get levels? Well, you get them from the left, it's the same thing. When we were selling, I was trading the levels from when we were buying up. Then when we started buying up, I'm trading the levels from when we're selling down. So always look left as far as you need to go. Husky. So I almost always, I almost always wait for a candle close. There is more risk with that because, I mean, maybe you buy calls here, maybe you're chasing it a little bit, and you say like, I'm gonna wait for, I want a candle close down here. I don't know why you'd have that wide of a stop or why you'd be buying up here, but say you did. Well, by waiting for this candle to close, you ended up adding like 30, 50 cents more risk, So there is risk to it. But the reason that I wait for candle closes is maybe you get something like this where we broke above, we sold below, but the buyers really showed up. So, maybe you bought this candle thinking it's the reversal, and maybe this one, you wanted to see what happened. Well, you could have got blown out, but it kind of saved you and came back a little bit. So that's where you take your stop out on that candle close. But there's times where, like maybe here's a better example. Maybe you saw this, you weren't paying attention to the trend, and you thought, hey, this is actually like a pretty nice reversal candle. So you buy this pullback. Well, when you wait for the candle to close, your stop is your planned stop. Just nice tight little stop, 20, 30 cents. Well, your actual stop ends up blowing you out. So you do add risk by doing that. But if you really, really trust your levels, you'll frequently find that you can either escape not nearly as hurt, or you won't stop out of a trade that you shouldn't have stopped out of. Can I show my favorite time chart drop down? I don't exactly know what that means. You have QQQ to 475. So I don't, so remember everybody earlier in this class when I was like, you don't want to be the person that is giving the $8 below us price targets. This is exactly what I mean. I'm not trying to pick on you here, Norvin, but so you're saying 475. Well, okay. What about this 480.69? What about these like really major highs from 483.33? What about, these lows at 477? You have multiple, not only EMAs, but, and even, I mean, I would even probably just mark this as a zone, 477. What about all these important things between here and there? You can't just throw out random numbers. And sure, maybe we get this huge sell, but you never want to be the person that watches the $10, $9 sell on something, and then you want this set you $7 more. Could it happen? Could jobs dump us all the way down there? Could we be there before open? Sure, but you need to be realistic in your targets. The huge yellow thing, I don't know what I was looking at. Oh no, this is from my example, and then I extended it to the right, so it goes forever. But that's nothing. That was the daily trend that we were looking at. That's all. So when I'm talking about stops, I am talking the easiest way to analyze risk reward for most people, because they aren't going to go look at the Greeks to understand it. I'm discussing cents on the stock. So, you buy this, maybe you buy this dip or whatever, maybe you buy this dip, your stop's down here, you're risking 30 cents of movement against you. Well, if you we can call it even 33 cents. If you understand option Greeks, then you can actually look at the delta and you can say, okay, I got 30 delta. I'm risking a 30-cent downside move. That means I'm risking $10. So you can do that. That's what I do. But the easiest way to say is you're risking a 30-cent move against you on SPY. So I'm discussing stock price when I'm saying that. What do I think about QQQ tomorrow? That I'd love for it to just rip faces and just destroy the late to the party bears, but it is completely up to data. But I think both QQQ and SPY have found themselves, I think QQQ and SPY have found themselves at a point where if the market wants to, it can bounce. Otherwise, we continue the breakdown. Like if we break below this 483.30, I'm likely going to be targeting that 480 zone tomorrow. And then same as SPY, if we go to SPY again, ignore the ugly yellow line. I know. If we stay down here, maybe, under this 468, I'm going to start looking at some of these wicks, 467.40, probably this wick over here, 466.82. And then ultimately, I would expect a bounce around this 465, previous breakout areas, big support areas. So I think, that's right. I mean, we have some potential bounce points. But you never know how elections or any of that stuff is going to go. So, markets got a lot of push and pull on it right now. Really no good way to know where it's going to go. And that's why we use price action and we read the chart and let the chart tell us what to do, not our feelings. Okay, Narvin, not tomorrow. Yeah. Okay. So if you are saying you would expect a QQQ pull down to maybe this 475 area. I mean, I would even put it a little bit higher, 475 area, looking for a bounce over next little bit. I would not say that you are wrong. And, that is much more reasonable. I thought you were just like, we're hyper dump, $8 more tomorrow. Okay, well, that is going to do it. We ran a little bit late tonight. Thank you all so much for being here. Halloween, so I appreciate you taking time out of your night, whether you celebrate or not. Thanks for being here. Yeah, thank you all. Yep, thank you everyone, and have a great rest of your night. I appreciate you for being here, and we'll talk to you tomorrow. And as always, DM's always open. If you got a class idea or if you got a question, that's what I'm here for. Send them my way. Thank you all. Have a good one. We'll talk to you soon. Bye.